Kunal, hi, good morning. What's it looking like?
It's looking a bit better for our markets than what I think we've probably anticipated over the last couple of days. Looking at the way US markets have corrected, there's almost been like a 3% to 3.5% correction in the Dow in the last 2 or 3 days itself. And when you look at this in the context, it's almost like a 4,000 to 4,500 point correction for Dow in the last 1 month. So I think in that context, we've done we are doing reasonably well, and that probably indicates that our markets are a little bit insulated, and the fall which had to happen for the indices, I think seems to have happened for our markets. We are navigating at 22,500 mark quite well over the last couple of days. The quantum of selling from the FIs on the cash market, that's also been a little bit less than average than what we've been seeing earlier. So that's another positive sign. We are seeing slight built up of long positions on the derivatives contracts from the open interest on the index futures from the FIs. So that's another positive. The market breadth has started to improve. We are seeing sector leadership, on a steady basis. I'm not saying very aggressive basis, but I think that probably indicates that maybe the market breadth has started to open up a lot more better than what it was maybe in the earlier last couple of weeks. So I think in that context, I would believe that the markets are ripe for a continuation up move. It's just that we are bound to consolidate for a couple of days because the sentiment has not yet improved on the extreme positive side. So I think that will take some bit of more time. 22,500 remains to be a key pivot support, pivot range, 22,200 as a support, and I would still believe that 22,800 towards 23,000 mark should be tested potentially in the next 1 to 2 weeks.
Okay. Nooresh, what do you make of yesterday's recovery? Yesterday's recovery, in a sense, was not just it was in isolation. World was not doing very well.
So the recovery is a good indication that the markets are going to find its own base and not be moving as per the global indices. We started a correction also on our own rather than falling into global indices. So the base formation should also be on the own. And what we are starting to see is some support around the 22,000 mark. The breadth has not deteriorated on this recovery. We are seeing more positive indications than negative. We need to cross about 22,800 for the momentum to shift. So for now, we get into a range 22,200 to 22,800 for the near term.
If you like this video, then like, share and subscribe to ET Now.